Hey everyone, so welcome to my video where I explain the OREC form for filling out for a customer that has a conventional loan. Before I do that, I just want to introduce myself. My name is Brad Anderson. I'm the broker and owner of White Rock Realty. We operate in the states of Texas, Oklahoma, and New Mexico. And I have put together a list of contracts that you would need for a typical listing transaction, buyer transaction, and a lease, whether you represent the landlord or the tenant. And these are great for setting up your contract templates and transaction desk. And I often get questions on what contract I need for what. And so this kind of keeps it all in one place. I am more than glad to send this out to you for free. If you want this, go ahead and either text me at this phone number, email me, or a combination of the two. It's totally up to you, and I will send that out to you. If you are not a White Rock Realty agent, maybe you should be. We do a lot of these videos. Education is really at the center of everything that we do. And I think that the more knowledge you have, the more confidence you have, and that is going to undoubtedly lead to more closings. So if you're interested in what we have to offer, you can go to this website, whiterocktexas.info, and see all of what we have to offer. So hope to hear from you there. So without further ado, let's go into the contract that I wanted to review today. So we're going to review actually I have this popped up. All right. So this is the form I wanted to review today. This is what you would provide in the stack of contracts if your client is purchasing a home and using a conventional loan. I have other videos that explain how to fill out the forms for an FHA loan and a VA loan, but today I'm going to concentrate on conventional. All right. So if you'll remember, the contract for sale always assumes that it is a cash transaction, all right, as it says here, unless a financing supplement is attached. So that's what we're reviewing today. So this is the financing attachment, all right? So it begins by saying the buyer acknowledges that all explanations, representations, and disclosures relating to the terms and conditions of the loan below are the responsibility of the lender and not the seller or seller's broker or buyer's broker and their associated licensees. This financing supplement is made an integral part of the contract, which means that it is part of the contract. All right, it's not separate. All provisions of the contract shall remain in full force and effect. All right, so it then goes on to say the loan. All right, the contract is contingent upon the buyer qualifying for a conventional loan in the amount of. So you would put the loan amount here, not the sales price. So let's say that this was a $400,000 home, and they were putting 20% down. Now, you would get that information from the lender in the form of a pre-qualification letter before you even went out and looked at a home. Okay, so if they're putting 20% down on a $400,000 home, their loan is then $320,000. So that's the amount that you would put here. And then it goes on to say, well, plus private mortgage insurance, if that's even applicable. If the buyer is unable to secure financing and provides a written notice to the seller or seller's broker, if applicable, within the time period provided in the closing, funding, and possession paragraph of the contract, the earnest money shall be refunded to the buyer, subject to appropriate written authorizations from all parties to the contract. So let's take a look at the closing, funding, and possession paragraph. That basically means the closing date. Okay, so in other words, they have until the closing date to get the money, not pre-qualify or pre-approve, but get the loan, final loan commitment. The loan is gone to underwriting and been approved. Okay, so they have up until the closing date to make that happen. Because no one wants to sell someone a home if they can't purchase. But then it says, within 5 days following the time reference date. So remember, the time reference date is not necessarily the date the contract was signed. It was the date that both parties agree to from where that clock starts ticking, that you have to do a whole bunch of other stuff that are time sensitive. Okay. So from 5 days from the time reference date, the buyer shall, and they give you two choices. One, make application for the described loan or any other such loan buyer deems acceptable and proceed diligently to obtain such loan. So remember, as I've said before, anything that OREC puts in these contracts that's bolded or underlined is really important. So hence the next sentence. Buyer shall pay initial loan fees, including property appraisal and credit report fees at the earliest time permitted by federal regulation. Buyer shall instruct lender to immediately begin the loan approval process. Buyer shall also instruct lender to issue a written statement of conditional loan approval. Now, it's not the final loan commitment. That would have to go through underwriting. But you're basically doing everything but getting that final loan commitment. And you're going to deliver that to the seller, the lender will, to the seller within X amount of days of the time reference date regarding the following. So before we get to the following, it says 10 days if left blank. Well, it takes time to look under the hood and determine whether a buyer really is qualified to get this loan. They are things like paycheck stubs, bank statements. If there is a gift being given from a relative, that takes time. So if the default is 10 days, that should be a signal to you that you need to add a couple of more days on there. So I always say 15 days or more. It should be pretty much everything before it goes to underwriting. So that is going to be somewhat dictated by the buyer's lender. If the lender says, yeah, I can get all this done in 14 days or 15 days, put that in there. All right. But then it goes on to say within X amount of days of the time reference date regarding the following. So these are the deliverables within this prescribed amount of time that the lender has to give to the seller. Review and approval of buyer's credit worthiness, income and funds necessary to close. Secondly, confirmation that the buyer has paid the initial processing fees. Third, the property appraisal has been ordered. Okay, now that's not a cheap ticket, by the way. So before you even march down this road, you really need to make sure, and as does the buyer, that they can actually get this loan. Okay, because they have to pay the appraisal fee early on in the process, and that could be costly. And then lastly, loan approval is not subject to the sale of the sale or closing of buyer's current property unless stated elsewhere in the contracts. There is a provision for that, but this is just an acknowledgement that this loan is not contingent on the sale of the buyer's current home. Okay, now it could be, and that's fine, but there's additional paperwork for that. All right, so that's choice one. Choice two is give notice to the seller that the loan terms aren't acceptable and cancel the contract by delivering written notice of cancellation to the seller and receive a refund of the earnest money. All right, so this B is done within 5 days. Okay, so within 5 days, the buyer shall either, and we reviewed A, or just say, I already know what the terms are. I can't get the interest rate that I need. I can't get the loan type that I need, so I'm out. Okay, but then it goes on to say, If within the time specified above, a written statement of loan approval is not delivered to the seller, well, the seller has recourse. The seller may provide the buyer, it says may, doesn't mean they have to, but the seller may provide buyer written notice of intent to cancel and terminate the contract. Upon seller providing notice to the buyer of seller's intent to cancel, the contract shall terminate upon the fourth day following delivery of the notice. However, if buyer delivers to seller a written statement of loan approval before the end of the fourth day, the contract shall remain in full force and effect. Okay, so seller can deliver the notice of intent to cancel because they haven't gotten anything indicating that the loan is good to go, but they have 4 days for the buyer to come forward and say, well, wait a second, I actually can get this, and here it is. And if that's done by the last day of the fourth day, it continues on as planned. Well, then it goes on to say, talks about the appraisal value. If the property isn't appraised for loan purposes for less than the purchase price, the buyer shall have the right to cancel the contract within 3 days after the buyer receives that appraised value by delivering written notice to the seller in care of the seller's broker. In the event the contract is canceled, the buyer and seller, by their signature to this contract, hereby instruct the escrow holder to return the earnest money in full to the buyer, and the abstract shall be returned to the seller. Okay, so in other words, if it doesn't meet the sales price, if the appraisal is less than the sales price, the deal could be over. Now, when would it not be? Well, let's say the home is listed at $400,000, the appraisal comes in at $390,000. Well, the seller could say, okay, it's only $10,000. I'll lower the sales price to $390,000 so that this can continue. Okay, the documents will have to be changed, but that is one way that the deal can be saved. But if the sales price is $400,000 and the appraisal is $320,000, well, that's pretty far apart. And so you may not be able to come to an agreement on the sales price, because theoretically, any difference between the appraisal and the sales price has to come out of a buyer's pocket. So when the gap is that big, typically the buyer will cancel, and they have 3 days to do that. Okay. Then it says loan closing costs. Buyer shall pay at time of closing, if required by the lender, loan closing costs, including, if applicable, origination fee, loan discount points, first year's homeowners insurance, if applicable, flood insurance premium, tax and insurance escrow deposits, interest beginning the day of closing through the end of the month. So these are all of your buyer's closing costs. And this just puts in writing that the buyer is going to pay this at the time of closing versus before. And then there's a box to put in any additional provisions. And then this is signed by the buyer and the seller. So this is not signed by either agent, because we are not parties to the contract. All right, but the buyer and seller is. All right, so that is pretty much it regarding how you fill in the conventional loan addendum. Hope you found the video helpful. If you have any questions, please reach out.